Good evening, everyone. It's good to see you all here again. We will begin the session shortly. I will hand over the stage to Harish Damodaran, who will welcome the panelists and start the session. Over to you, Harish.
Okay. I don't think many of the four of them need much of introduction. Let me first introduce myself. I'm Harish Damodaran. I'm the moderator for today's discussion, and the topic is all there. I'm basically a rural affairs and agriculture editor at the Hindu. I still speak Hindu business line, but I'm with the Indian Express for the last 6 years. But still, I have very long recollection with the Hindu business line, with whom I was for 20 years. Yeah. Then the other panelists, of course, Dr. Ashok Gulati needs no introduction. He's an Infosys Chair Professor for Agriculture at ICRIA. It's a think tank in New Delhi. And he's a former chairman of the Commission for Agricultural Costs and Prices, the CIC, which is the body which recommends the minimum support prices that the government fixes for about 23 crops. He's easily India's best known agricultural economist. And he's also on the boards of the RBI, NEBARD, and NCDEX. Okay. Dr. Nikhila Krishnamurthy is a senior fellow at the Center for Policy Research in New Delhi, and also associate professor of sociology and anthropology at Ashoka University. Trained at Harvard, Cambridge, and University College London, where she did her PhD. Nikhila has closely studied APMC mandis that are the subject of today's discussions. And her latest work is on a study of the agricultural markets of Bihar, Odisha, and Punjab for the University of Pennsylvania, and which has been funded by a grant from the Bill and Melinda Gates Foundation. And I know her right from the time when she started. I think she stayed in Harda Mandi for about 2 years. Harda Mandi in Madhya Pradesh. So she knows all the actors there, not just the farmers, but also traders, the hammals, that is the workers, the laborers who do the cleaning, loading, unloading, etc. So she is very familiar with the Mandi landscape, with the Mandi ecosystem. Mr. Balram Singh Yadav is the managing director of Godrej Agrovet. It's a very diversified agribusiness company, which is India's largest animal feed seller, and also the largest domestic palm oil producer of India. And he also heads Godrej Tyson Foods that sells processed poultry products under the Yummies and Real Good Chicken brands. And Mr. Chandramohan is the managing director of Hudson Agro Product Limited. I'm sure all of you know him. And it's India's largest private sector dairy, which handles around over 1 million tons of milk annually. And his company sells, you can see all the brands, Arokya pouch milk and Hudson curd. Apart from manufacturing, South India's largest and India's third largest ice cream brand, Arun. Okay, so I think we can. I don't think I need to introduce the panel anymore, and we could probably start with the discussions straight away. I would like to first thank CIC, particularly Vanita, Shankar, and Mr. Venugopal for inviting me to be the moderator for this event. The idea for it actually came from Mr. Venugopal, and it was he who gave me an opportunity to work at the Hindu business line. I was there for 20 long years, and I still consider Mr. Venugopal my boss and my mentor. So when he asked me, I think it was around September 23rd, to organize a panel discussion on the 3 farm bills, I had no choice but to, treat the request as a command, and so then it was just a question of assembling a panel. And I can assure this very, I think probably a very discerning and curious audience, that the speakers you will find are the best you can think of. And we have consciously chosen 2 academic scholars. One who is an economist, and the other is a social anthropologist. And the other 2 people are from the industry, who are in the actual business of buying, selling, and processing farm produce. I want to make it clear at the very onset that we are not going to focus on the merits and demerits of these 3 bills, because all of them, for all the 3 of them, for good or bad, they have been enacted and now have been signed into law by the President of India. right? So what we are going to look at is their impact, how they will actually play out on the ground, And so I'll start off by posing this question to Dr. Gulati, about, as I said, I think Mr. Balram Singh Yadav was saying that he's a god, So we'll start off with the god, and the god in this field, So my single question to Dr. Gulati for you is, see, how will these three acts work on the ground? How long do you think the results will show? Any time frame, 3 years, 5 years, long term. Of course, we are dead. But anyway, yeah. And what do you think are the complementing actions of the government, that are necessary for these acts to to unleash the true potential of Indian agriculture, which is the topic of our discussion. So, Dr. Gulati, maybe 6 to 7 minutes of your opening remarks.
Well, thank you very much, Harish. Pleasure joining this very distinguished panel. Also to Vanita for inviting me for this. You took Hindu business line, Venugopal, as an order, and I took your request as an order. Okay. So, 2-3 things. I think that these 3 farm bills are opening a gateway to a different direction of agriculture marketing than what we have been tuned to largely. Now, good or bad, you said don't dwell much on that, but how they will unfold. I have compared these bills more like the 1991 delicensing of industry. Delicensing of industry was a major bold step to give a different direction to industry. And this is likely to give a different direction to agriculture marketing. Now, if you are thinking when the results will come, I want to take you back to delicensing of industry, that it was not within a year or 2 or 5 that there was a manufacturing revolution in the country. You remember the initial days and initial years of Bombay Club and how they were opposing that this will deindustrialize India and so on and so forth. But you look back today and you would really get amused that we were under a license Raj for all the years from 47 to 91. Was that good? Or with all its shortfalls, delicensing was a great step forward. It has given confidence to industry, has created much better competitiveness of the industry. Tariffs were reduced from 300% to now even 10%, 15%, 20%. So all this transformation takes time. And that is not an issue whether it will be within 2 years, 3 years, you will start seeing the results. Yes, you will start seeing the green shoots. And the green shoots would depend upon 2-3 complementary actions and where the business people feel safe to invest. Even after 30 years of reform process, the Eastern India hasn't gained from industrialization as much as the Western India and the Southern India has gained, because they found the investment climate and their markets much better in the Southern India and Western India. Now, if the states are not ready to welcome those investors and they show massive opposition, then which investor will risk putting his money in those states? The business people also have to evaluate whether this particular place will make sense in terms of infrastructure, in terms of power supplies or building supply lines that I have. And that's where, the often cited example of Bihar, that Bihar, repealed APMC Act a long time back. Nothing has happened. Nothing has happened on the manufacturing front also in Bihar, because Bihar had a very different governance problem initially. Then there were no, infrastructure in place, power and so on and so forth. So the business people will go where first they can get good returns for them. And I'm saying, I think in the 3 to 5 years horizon, you will see not one but hundreds and even thousands of new experiments coming in to build directly supply lines connecting with the farmers. Now, farmers, whether they will go with individual farmers or they will go with farmers organizations of 50 or 100 or 1000 farmer producer organizations, as it happened in case of milk, the milk cooperatives. But you have Mr. Chandramohan sitting right here, who has even tied up with each and every individual farmer. So there will be different business models that will emerge out of it, depending upon how the investors feel confident to make it an more efficient business supply lines, which ultimately will bring efficiency, competitiveness. And given that our agriculture is largely, smallholder dominated agriculture, I feel they have no option but to devise and innovate models which are inclusive in nature. And milk is a clear example of that. So I'm pretty hopeful that in 3 to 5 years of horizon, because already Prime Minister has announced that 10,000 farmer producer organizations will be in place. NABARD has been given the marching orders. 1 lakh crore of agriculture investment fund has been announced. I don't know how much of that will come into action and what is the time period within which it can happen. Government programs announcements are always bigger than what the reality is. But it's not the government that is going to make these supply lines. It is the business. So if some states take an initiative and tomorrow in the newspapers they announce we welcome investors, come in, we will give you 30% subsidy to create back-end infrastructure. And along with farmer producer organization, those states will take a big lead and investors will go there. They will create processing facilities. They will create value addition in organized retail or exports or other things. So overall, I look at this scenario that the so-called mandi system, which was more or less quite oligopolistic in nature, is given a big challenge to a different type of model, and let both models compete and see which can emerge as a more competitive model for the country and more inclusive model for the country. So my take on that is overall, to wrap up my first round, it's a step I feel in the right direction, a bold step in the right direction, and business and the investment climate and the infrastructure that needs to be put in place will depend upon state to state, region to region, commodity to commodity. That will differ. But within 3 to 5 years, I'm pretty hopeful you will have hundreds of examples of success stories coming out of it. And there will be some bad apples too. So you cannot just have a cherry pick only the bad apples who have not done the right thing and say, oh, entire model is wrong. So that's what my take would be in the first round. Thank you very much.
Thank you, Dr. Gulati. It's very interesting that you expect that the results to show depending on the states, right? And in this case, we have central laws, right? So still everything depends on the states, right? I mean, what kind of environment they create, etc. Despite the center taking the lead and including even whatever, undermining the neutralizing the APMC acts, almost kind of a thing. I think now we'll come to an industry person. I'll come to Mr. Balram Singh Yadav. Mr. Yadav, you have seen this entire APMCs, etc. I mean, 31 years of experience, starting off as a area sales manager. You've gone to some 400 districts of the country. And your company itself is very complex, because when I was going through this thing, I mean, you sell something like 1.3 million tons of poultry, dairy, and aqua feed, and you are producing it from some about 34 factories all across India. And so right now, what is your sourcing mechanism? How much of it do you procure from the APMC mandis? and will you now, start buying more from farmers, similar, and you are already doing that in the case of, I think, oil palm. In fact, I think Godrej Agrovet is India's largest palm oil producer. I think you're doing contract farming on about 65,000 hectares, and I'm told about something like 10,000 plus farmers, you were saying, and plus you do contract farming with poultry farmers, right? About 5,000 farmers, right? About 30 lakh birds a month, right? I mean, so I just wanted to know, how much how do you procure maize, for example?
Yeah. So I think before I talk about what we do in Godrej Agrovet, let me put my comments on whatever has happened. I think it is very difficult to speak after Dr. Gulati, so pardon me that. So in addition to whatever he has said, let me tell you that this is one industry which, if not is living in centuries, it is definitely living in decades. Some districts are in 20th century and some districts are in 21st century, and there are business models, experiments, successful business models in all areas, according to me. So whether you talk about contract farming, direct procurement, bypassing APMC, not bypassing APMC, I'm saying that there are examples to go by in all areas. I definitely feel that we have seen in ENAM and on in-own procurement system, which I'll come to, that the intermediation cost definitely goes down once we go out of APMC. So that definitely will happen. You're talking about short-term changes. I also want to tell you that APMC will not vanish. These people are very, very smart. They have the infrastructure actually. Everybody else will have to put a new infrastructure. But these people already have infrastructure. They will become efficient. They will reduce the cost. This liberalization will make them start marketing APMC. Karnataka has already reduced the market fee. Haryana and Punjab recently have reduced the market fee for exports of basmati. They had never thought of it earlier, but now they have started thinking of that. And Haryana has reduced from 2% to 0.5%. Punjab has reduced from 2% to 1%. Some of the other things which I feel is that there are three things which the government has done simultaneously along with the laws. I think pushing the FPO is very important because consolidation of farmers is very important for a lot of benefits to be realized. Because if you really ask me, to be able to access technology, to be able to access credit, to be able to access new skills, to be able to play in the e-com market or forward market, it is very important that they are consolidated and they have sufficient marketable surplus. So I think that is very important. They also got that Kisan credit card, etc., because it is very important in case you step out of the APMC. You will have to probably reduce dependence on the Adatiyas for flexible credit, etc. And one of the things which I feel, I do not know whether fellow panelists will agree, because as soon as the farmer starts moving out of APMC and selling directly, his dependence on formal credit will keep on going up and stranglehold of Adatiyas will come down. But it will take time, as Dr. Gulati says. I fully agree. I also feel that there are so many examples of successful contract farming in India, particularly poultry industry, 70,000 crores of industry, 60,000 crores is contract farming. And why it is successful? Because we have taken out the price risk. So we will give checks, we will give feed, we will give vaccine, we will give medicine, we will pick up the bird, and the farmer gets growing charges. He is not exposed to the volatility. So these are some of the models which are available. There is a contract farming there in specialized crops, in seeds. Wherever you can pay more than market for quality, contract farming is very successful. But a lot of these changes, a lot of these things will be driven by buyers. I am telling you that you go and say that why don't you go to a village in Maharashtra and say why don't you all start growing tomatoes? They will look at your face and they say I'll buy whatever you produce and that there will be a reference price, etc. The whole village can shift to tomatoes. So this is it will be driven by access to market, which these laws have created. It has broken that legal cartel which used to exist because of APMC. So it is really liberalization, and I quote Dr. Gulati everywhere in a webinar yesterday, in a webinar this morning. I said, let me quote Dr. Gulati that this is 1991 moment for Indian agriculture. And I must tell you that you will see now there is an index for the attractiveness of states in agri processing industry. You know that? So states are also rated on the attractiveness in agri processing. And I think this will become a very big input into that. So you will see, it will take, I'm saying states have to take on board. Some of the states will get faster, some of the states will, or there will be always laggard, some will be early adopter. But I'm telling you, as Dr. Gulati says, between 3 to 5 years, you will see one of the most fiercest form of competitive federalism in the Indian agri sector. Because of these funds, the infrastructure fund, according to me, Indian villages and near villages are becoming an important investment destination. Now coming to agrovet, because of there is no APMC law, we use about 600,000 tons of corn, but we procure only from Bihar, directly from the farmers through aggregators. It is not possible. Yeah, we don't go to any other state because of this license and that license, this harassment and all. Kyun karne ka ye, sir?
So entire 6 lakh tons of your requirement you buy only from Bihar?
No, we buy 100,000 tons from Bihar, which is because it is not viable to buy at Bihar and bring it everywhere.
Correct.
Now, if you give me time, I can speak for a minute on Bihar also in next round, because people are giving Bihar example, which is a wrong example. In poultry, we do contract farming. 75 million birds are produced in this country every week. 20 companies produce 60 million in contract farming successfully because they have taken price out. In oil palm plantation, Dr. Gulati knows very well because it is a formula-based pricing. We pay on the price of oil price of that month. So that formula is very clear. And that is why there is something on the table for the farmer, something on the table for us. It is regulated very efficiently. And of course, had his report been accepted, the CIC report, this industry would have boomed. But unfortunately, it is still pending. Hopefully, it will see light of the day sometime because he had reformed that also and he had made that more dynamic. But I am saying that there are examples of unshackling agriculture and giving it a boost, whether it is regulatory, whether it is policy, or whether it is business models everywhere. Fruits and vegetables, most of the modern retail, part of their fruits and vegetables comes through direct buying. FPOs are mushrooming everywhere, particularly in fruits and vegetables. And what they are doing, they are working with these startups, and these startups will also mushroom, and they will also expand their activities into cereals, pulses, and oilseed, which was protected by APMC. So, whole amount of plethora of activity is going to start. 75% of them will fail, but 25% of them will be super efficient. You will see unleashing of technology because, you know, the worst part is that wherever you have very complex thing, agriculture is very complex. That is why technology implementation is very, very important. Because humans cannot solve that problem which technology can solve. And rural India is changing because government is delivering goods and services, including money through technology. So they are just learning fast. So I see in first 3 years it will be slow. All these states will realize the benefits and slowly everybody will adopt, everybody will come, big models will be established. India has to become export hub because we are going to produce more and more. Nobody can stop. Irrigation will change this game totally. Every year, good monsoon means we are very scared of plenty because we'll have to spend 4-5 lakh crores to keep our farmers poor. To procure cereals, we don't need. To support sugar, we don't need. You got it? So this is, today we are scared of plenty, problem of plenty. So we have to develop export hub. Great thing is for processing, for storage, for logistics, for cold store, 100% FDI is there. Once you develop an export opportunity, which will only develop when productivity improves and prices fall, because we are priced out in the market. At one time, 100% of soya meal in Bangladesh used to be Indian, 100% corn in Bangladesh used to be Indian. Now it is less than 10% because it makes sense for them to bring it from Latin America and not buy our corn. So we are priced out because of our artificial high prices. So huge amount of activity is going to happen. It is a very complex sector. The only thing is that once the energy is unleashed, it is unstoppable. 70 crore people will work towards it.
Thank you, Mr. Yadav. I'll come now to Mekhla. Mekhla, you have seen many mandis. I mean, of course, you spend a lot of time in Harda, but you have also seen other mandis in Madhya Pradesh, and also I think Punjab. You've seen the how agriculture markets function in places like Odisha and Bihar also, right? What do you think is now going to happen to these APMCs? Because of this mandi fees and state levies not being levied in so-called trade areas. So what's going to happen to APMCs? You think they'll become the next BSNL? What is this thing? I mean, do we write their obituary? What is the thing according to you?
Thank you so much, Harish, and thank you to CIC for having me on this really wonderful and very distinguished panel. It's a great honor and privilege to be here and to have an opportunity to share my thoughts and some research with you. Harish, I mean, it's particularly like, I think Professor Gulati said, I also took my orders from you, but I remember when I started this research in 2008, you were one of the people who I'd read and also, introduced me to a number of different people in the soybean markets of Madhya Pradesh. And if you recall those years, 2004, 5, 6, 7, there was a lot of optimism. Mr. Yadav, listening to you, it was almost like deja vu. When I began my research, this was around 2006, 7, 8, when you start talking to people, there was exactly the same optimism. ITC had come, everybody was talking about e-Chopal at that time, but there was Haryali Kisan Bazaar, there was, Reliance had begun to launch its work, but many other companies, Godrej had already explored, Tata was exploring, across the board, there was a lot of enthusiasm. And I think this period, these 15 years have given us many lessons. And I think it's worth, thinking about that. But when I started that work, particularly Madhya Pradesh actually amended its laws to allow single license yards outside of the mandi in 2002. This was a year before the Model Act. We should just keep in mind that states were also moving in that direction and have been for some time. But in 2002, they actually passed that amendment, but 3, 4, 5. In 2004, there was a huge strike. Mandi traders across Madhya Pradesh for 1 month went on strike against the Chopals. And there was a huge resistance. And one of the things that was interesting at that time, they actually said this is the East India Company moment. You're opening the mandis up to complete devastation. You watch what is happening. And over the years, what you saw, actually what Mr. Yadav described, in the stronger mandis, you actually saw competition, you saw mandis upgrade their systems and processes. You saw in many cases, mandis also recognize what their unique strengths were. These were public markets where a whole range of actors could sell, so farmers could sell of all kinds, whereas only certain farmers sold to ITC. ITC bought for certain periods in the month, in the year, in the post-production harvest system, not the whole time. So actually the mandi also discovered its own comparative advantage during this process. And interestingly, many companies continued to buy, both directly from farmers and from the mandi and APMC system, depending on what their requirements were at different times of the year. So I think most mandi traders today in Harda would tell you that the rumors of their death, to quote Mark Twain or his famous quote, were grandly exaggerated. I think most of them will admit that they were also unnecessarily panicked, and that is a reaction that is expected. So I think it's important to ask why mandis will survive in certain places. And it's also important to pay a little attention to the fact that some of the reasons why many of these corporate strategies that were launched in the mid-2000s have not flourished in the way that Mr. Yadav and Professor Gulati have already sort of talked about, are partly because there was not enough regulatory certainty, there was not enough depth in the reforms that were attempted. I think there is no doubt about that. I think they were not backed with public investment. That's another very important element of the piece. But it's also got to do with the prevailing conditions of production and consumption in this country. So I think we must be very clear that it is not just because reforms didn't work earlier. it was also because of the way in which agricultural production and consumption work out, and that in this ecosystem, primary agricultural markets, spot markets like mandis, play a very important ecosystem role. And I'd like to take just a few minutes to talk through that, but also to give you a sense of a little bit of the regional variation. So, I mean, when we think about APMC mandis, we usually, and that's even more recently been in the media, we think about Punjab and Haryana. We actually immediately equate it with the MSP, which is actually a problematic equation because mandis do not guarantee MSP. No mandi in this country guarantees MSP. Only where government buys in that mandi, the government must guarantee MSP. Right? So most mandis are markets for private trade. They regulate private trade between private sellers who are, producer sellers often, but other intermediaries as well, and buyers. And so the idea that a mandi assures MSP, I think, is a misconception. In most places, that's not the case. Of course, that is true in major markets like Punjab and Haryana, and in some other markets where the state is a major buyer. But I think they've already mentioned this. In Eastern India, for example, most farmers have not been forced to sell in mandis. They have been forced to sell outside mandis. And the reason for that is because historically, over these decades, both center and state governments, most importantly, remember, this is a state subject, state governments have not implemented nor respected their own acts, which required them to create well-functioning primary markets. Our 22 to 25,000 hearts, which are very important for particularly in tribal districts, in remote rural districts, have not been invested in by the state historically. And even primary agricultural markets have not been built. So I think in those states, farmers really have not had the first generation benefit of strong, well-regulated primary agricultural markets in the first place. So I think that's one thing we have to keep in mind, and I would very much hope that although this is about liberalizing markets, those states don't fail to actually invest in the need to have solid, well-regulated physical market infrastructure, particularly in remote areas. We've seen from the data where you do have strong primary agricultural markets, farmers benefit. So I think this is an important first point. The second thing is, a lot of what the fate of the mandis is going to depend on the fate of the final buyers. Because mandis in most places are assembly markets. They are markets where there's a lot of aggregation and assembly. And a lot of them, the traders, some of them are traders, some of them are processors who are licensed holders, and some are commission agents for larger buyers. So it is going to depend a lot on whether those larger buyers continue to buy within mandis and find that it is still competitive for them to do so. For distance buyers, there is a reason that a good mandi system is very important because it allows aggregation, it allows volume, and as long as the distant buyers continue, and this is why ENAM's architecture, the entire back end of ENAM is the mandi system. It's the actually existing physical market system. So this is very important to keep in mind. So if buyers, whether it's the state governments or whether it's FCI, continues to buy in the mandis in Punjab and Haryana through Artyas, then the mandi will continue to be the large hub that it is today. If similarly in other states where you're looking at non-MSP crops and not wheat and paddy, if larger buyers, processors continue to provide the mandi system with that kind of business, it will thrive. Here, I think competition will be important because already, as you said, mandis, states have started changing their taxation. I'd just like to point out that Madhya Pradesh, for example, in 1999 dropped its mandi taxes to 0.5%. It then moved it to 2%. This is not the first time state governments will experiment with taxation. This has also happened before. So I think if state governments continue to invest in the marketing infrastructure, if mandis continue to be points of collection, I spent some time over the last few weeks talking to mandi traders, and a number of them said, Mekha, it's not easy to move outside the mandi. You require space to do these transactions. You need, all our arrangements, whether it is our warehouses, whether it is the transport network, whether it's rake access, a lot of these things, if the ecosystem already exists, you will see these markets remain fairly persistent. My guess is some of the smaller actors who have found paying the mandi license or the mandi fee a little this thing may move outside. You will also see a lot of new actors. The government has said you have a PAN card, you can go and buy. This happened in Bihar also. A lot of people flood the market thinking that they will have, good margins. Most of them don't survive. So in the next round of consolidation, you'll see a lot of actors who came into this market not make it. Here, I think I do want to point out that there is a vulnerability for farmers. Under the new legislation, there isn't a really robust regulatory system. And everybody has pointed out the dispute resolution system is at present very, very untested. Counterparty risk is a serious issue in these markets. People who come, the first year they buy nicely, the second year they run away. You had an interesting story, one of your colleagues had reported on grape buyers in today's Indian Express. This is a real problem. We saw it in Bihar. Actually, the lack of having a well-regulated system meant an increase in the number of brokers that proliferated in the market because you didn't have robust counterparty systems. My own sense is that what we need is some kind of regulatory synchronization that gives both buyers and sellers confidence to participate in these markets. I think that is where the next phase of work, unless it does not involve much greater engagement with state governments and much greater effort to build a synchronized architecture, you may risk greater fragmentation rather than greater integration. And that will not be good for anybody. It will really not be good for farmers who actually look to markets, look to mandi systems. So in conclusion, I think I would like to say that I think I completely agree with Professor Gulati and Mr. Yadav that this must be a time where you think about comprehensive investments in agricultural marketing ecosystems. In these ecosystems, primary physical spot markets, multi-buyer spot markets, which currently is the role played by mandis, and they do have a comparative advantage in being already existing and having long histories of business already working out there, are going to be very important. I completely agree that producer companies and all are going to be very important, but somebody has already asked the question, why don't they thrive? They require a lot of investment, and I'm sure Mr. Chandramohan will have much more to tell us about the kinds of relationships that will be very important there. So I think unless we move towards a more comprehensive approach to market regulation and regulatory capacity in markets and greater integration, and unless that is done with center and state, just at one point, everybody has mentioned marketing infrastructure. Historically, market infrastructure budget lines, and we have done this analysis, have remained unspent or underutilized year on year. Right? It is not as if we did not have the money allocated earlier or that it was not required. It was simply underutilized. So we have to see this as an opportunity to really invest much more comprehensively in the capacities at all levels to both utilize these funds and to make the most of this momentum. I do not see it happening without state governments now playing an active role, and a much greater level of trust and confidence will be required to bring that about. I'll stop here. Thanks.
Thanks, Nikhila. Mr. Chandramohan, milk is a produce which is not sold in a mandi. We don't buy milk in a mandi. But despite that, we have seen that there are very few dairies which buy directly from farmers. They all go through bulk vendors. But yours is a very exceptional case where you are buying directly from farmers. You are paying them directly, right? I mean, I think you started paying farmers directly into their accounts even before demonetization, even before Mr. Narendra Modi did demonetization, right? You are now tagging their animals, right? Each of your about 4 lakh producers has a unique producer code. So how is it? Why is it that most dairies have not gone directly to farmers, whereas you have gone directly to farmers? And would you have done something differently if you were not in milk? Just that.
Okay, thank you, Harish. See, the problem, what we countered once when we entered into the industry is little different from the cooperatives when they started in Gujarat. Gujarat, Dr. Kurian, when he started, the intention was to alleviate poverty from the rural area and bring protein to city. So this way he was able to solve both the problems. There, unemployment was prevalent, and over a period of 25 years, urbanization has started increasing the demand for milk, and there has been an encroachment of land in the rural areas, and gradually agriculture was getting difficult in places like Tamil Nadu, where urbanization is more. What happened was, the farmer was not looking for poverty alleviation, he was looking for prosperity. If prosperity was not there, he was not going to go for agriculture. Sorry, not agriculture, dairying.
Yes.
So the challenge for us was to make him profitable and to stay in agriculture. Education, internet, TV, different things have been attracting the youth away from the rural areas. And unless he sees the prosperity there, he will be moving away. So what we did was, to give prosperity, the only way was either to increase the price, like MSP, and inflate the price, where we have to penalize the consumer, or we become uncompetitive in the international market. So we wanted to just address the basic cost, and we wanted to address yield per animal. For that, we introduced the tagging. Tagging helps us to understand which animal is which animal has got the semen, and the daughter animal will not have the same semen, we will repeat it to the different animal. And we also have a control today, which semen works well and which is giving more pregnancy, everything we have a control because of the data. So once when we started introducing, we were able to get better productivity in a healthier manner from the same animal. Again, on cost reduction, we are the first people in the entire country in the dairy industry to work on cost reduction. We worked with Coimbatore Agri University to develop Napier crop, grass, Co3, Co4, Co5, all has been developed by them. We have a chair in Coimbatore Agri University, but the propagating of the work came to us and we did it. Fortunately for us, we were having direct contact with the people. And as a system, why we wanted to have direct contact? The middleman, normally here, he is like a money lender and he manipulates them in quality and quantity, being a perishable commodity. He also charges an interest of something like 72%. So we wanted to eliminate the middleman and we opened the centers. We have got 9,500 centers operating every day, collecting milk in the morning and evening. We don't buy from any aggregator. We don't want any aggregator to come to us and we drive them off. And once when we do it also, still our own man may be just playing some game between them and us. And we introduced a very transparent system where when the farmer comes, when he has tested the milk, he will have an SMS straight away and he can also see what is the quality of milk, what he is pouring, what is the fat, what is the SNF, what is the quantity, what is the price. It will all go in SMS in our digital system. Apart from that, we don't want them to be financed by any local guy. Once when he is financed by local guy, the problem is exploitation comes in. What we did was, we forcibly brought all the farmers for getting the payment from the bank. This is 2 years before demonetization. Farmers were totally against it. They were almost really against us. But over a period of 6 months, they understood the benefit because when they went to the bank manager was not willing to meet them and he was taking 2 hours to meet them. Today, he is waiting at their door to give a loan for animal, for daughter's education, everything. So he has become a decent customer of the bank instead of a loan waiver farmer. He has got a credibility of his own. Once when that has happened, his respect has gone. And we don't help them in finance in any way. The finance is going to the bank and more banks are vouching to farm on them. We will leave them any bank they want, but we do the transfer of money. So what has happened was, first we addressed on productivity, second we addressed on cost reduction, Third, we avoided the middleman. We brought the milk directly to our own outlet, and this the finance eradication. Over a period, what has happened? The loyalty factor started playing. We assured them 365 days, twice a day, without stopping any milk holiday or anything. We continue to buy irrespective of COVID-19 or not. So the reliability factor played a major role of trust formation. Today, the farmer is happy, and whatever the Prime Minister says on doubling the income, it has already happened to him. Because of simple automation, we brought down the labor cost also. We brought down the usage of water. We brought down the usage of fertilizers. We have brought down the labor cost because we introduced milking machine. We introduced brush cutter for cutting the Napier grass. We also introduced a vehicle trolley to just bring the Napier grass cut instead of head loads. We saw simple things and we tried to address them. Unfortunately, in our country, the universities are doing a lot of research, but farmer-university coordination is not there. We go on parallel track. So one track is going separately, like a railway track, two things, they don't meet at all. And we played the role of bringing the technology from the universities back to the farmer. We worked as a team and we were able to do it. We have got today veterinary doctors, we have got agriculturists, we have got soil specialists and all the people in the fold, so that we give a comprehensive idea of how he can be effectively making good money and stay at his village. There are some people who have got a car. They are very happy. So I also just take a ride when I go there with them occasionally to please them. And they are happy and we are happy. So basically, cost reduction and productivity is not addressed today in most of the agri commodities. In milk, we have initiated. As I said, the first initiation of cost reduction was done by us in the country ahead of any cooperative. Demonetization, we were the first people to do it. And brand building is something that is our focus. So today, whatever the government says as build the brands, double the income of farmers, demonetization, we are almost 1 or 2 years ahead of them. Hope before they bring the next proposal, we will be ahead of that also. Let us hope so. Thank you.
Dr. Gulati, I think there are already some questions. I think many people are asking, what is going to happen to the MSP? I think one of the main things, the reasons why there's been a lot of farmer backlash has been precisely this issue of MSP, because I think many farmers think that, once the APMC is shut down, then, government, so basically this is a backdoor kind of a thing to withdraw for the government procurement to stop and the MSP MSP to be given. What do you think is the solution? How does one assure farmers some kind of a price, and in a scenario where we can assume that a lot of trades will move out of the mandis?
The objective function should be increasing the income of the farmers in a sustainable manner and ensuring sustainability of the agriculture also. That should be the ultimate objective. How do we get that? One that Mr. Chandramohan actually focused on, and very rightly so, that you have to augment the productivity, right? So augmenting productivity gives you a leverage to increase your income, provided the prices do not crash, right? That is where the birth of MSP came in. In 1965, when we were importing those high-yielding variety seeds, we were expecting the productivity in Punjab, Haryana to go up, and the prices should not crash. There was a minimum support price. If the market was giving better, good, but we will stand as a support price, right? That was the idea. Now, at that time, it served its purpose, great, wonderful, because it minimized the risk of the farmer on the price front. But today, we are not in short supply of cereals. In fact, the three commodities in which MSP or assured price is implemented, I would say, to 60% level, not even 100%, 60-70% level. That is wheat, rice, and sugarcane. Sugarcane, government doesn't pay. It forces the industry to pay. You look at all these three commodities. Massive buildup of stocks. We don't know where to keep it, and unproductive capital of the nation locked in there, and then we will have to dispose at below the MSP. All sorts of things. Or in sugarcane case, the farmers will keep waiting for 2 years, sugarcane 8 years, and so on and so forth. Now, how do you increase income of the farmer? One was the productivity part, but the other is what is called a reasonably remunerative price. Now, the pricing is, at present, government said we will do cost plus pricing. In simple theory, undergraduate student will tell you it is only the cost curve. It is the supply curve. But there is no demand curve. So you are producing commodities which are not there in demand. Who is going to consume? How long that system will go on? And then in Punjab, you are producing paddy and depleting water table like anything. You are robbing the rights of the future generations of Punjab. Then you are doing stubble burning and, suffocating all the neighboring people. What are we doing? The third thing, besides the pricing, and I'll come in detail on the MSP will vanish or not. The third, which is not talked about, but which is implicit. How do you increase the income of the farmers? By shifting over a period of time from staples to more so-called more nutritious food. Milk is one of them. Poultry, the example that Mr. Balram gave on that question. Fruits and vegetables. Now, 80% of poultry is well integrated into the private sector. There is no MSP there. There is no MSP even in milk. And these are large commodities. And this is where the demand is growing at double to triple the rate at which the cereal demand is growing. So we are hooked to the cereals and the APMC and all that. Now, my take on that, what will happen to MSP? It will keep on going the way it is going on. Right? What is that going on? It announces for 23 commodities, but basically implements only for wheat and rice primarily in 5-6 states, not more than that. Bihar prices will always be, Assam prices always be, all eastern belt is below MSP for paddy every season. There's no. Now, whether mandis will be abolished or not, I think mandis will face a competition. There was a lot of discussion that mandi fee has been reduced. The real villain of the piece is not the mandi fee. It is the other parts of that. In Vashi market in Mumbai, for fruits and vegetables, the commission is 8%. You go there and you observe he is charging from both sides, buyer and the seller. It goes to anywhere from 12 to 15%. Now, if Mr. Balram or some other entrepreneur comes and wants to buy directly from the farmers, he has to create a lot of infrastructure and supply line. He has to invest in that, and therefore patience and perseverance. You can't have a horizon of just 2 years, I will do this. You have to have a horizon of 10, 15, 20 years. Only then you will be investing. But if you can do that through aggregators or directly buying from FPOs with a 1%, 2% intermediation cost rather than paying 10% intermediation cost, that is what will bring efficiency, and that will put pressure on the APMC markets to be efficient. And that means not just the mandi fee will have to be reduced, the commissions will have to be reduced, and these people are smart. Either they will start working with the private sector commission agents, work there at a scale and work at 1%, 2% and create that. But as Mr. Chandramohan said, and as he's saying that you have to decouple their interlocking of credit markets from the output markets. NABARD is already in the process with Ministry of Finance to ensure that FPOs get the working capital loans at the same rate at which they get crop loans, that is 7% and 4%, rather than at present they get, Mr. Chandramohan said 70%, 50%, 40%. Majority of them go to micro finance institutions at anywhere from 18 to 25%. Now, you can't do business when you're borrowing at 25%, and these are FPO. So already the work is going on, and hopefully very soon the decision will be taken that FPOs will get their working capital, and KCCs, all the payments have to be through the KCCs. So I think we have to keep in mind this finance question as we build these supply lines, and government is very much aware, working in that direction. Mandis will not go away. The pressure will be there. Indian Airlines has not gone away for the last 25 years when other airlines came in.
Well, but BSNL, we also have BSNL anyway. Yeah.
If they don't improve, they have literally a free infrastructure. It was given by government, those lands. And whereas for the private sector, they will have to buy land, and states will have to allocate some places. So this is why I was saying in the first round that the states which will announce, okay, we give you land, we give you 30% subsidy to build back-end infrastructure for drying facilities, for storage facilities, and solar operated this or that, those states will go ahead and investors will go there. But APMCs for 20 years, 30 years, till the time at least I am alive, they will not go away. Mandi commissions, fees, they will be under pressure. Punjab used to charge 14.5%, 14.5% before the GST. After the GST, even today, it is 8.5%. 6% is the government, 2.5% is the commission. 8.5%, that makes wheat totally non-competitive. And that is when you go outside, you could be exporting that wheat, but buying from Mandi after paying 8.5%, your competitiveness is lost. So I would agree with Mr. Balram that we have to look for exports. We have to be hub. Our potential is double, triple than what we are producing. I think that is where technology infusion will come in. That's where market access has to come in. And you have to free up the system. And there would be other vendors and others, but there would be, also Hudson's of this world and Nestle of this world and Saudi Amul of this world. And they are competing. There is no MSP. And it's growing much better, giving much better income from poverty alleviation to prosperity of the farmers. They are all bringing. Why can't it be done in other crops?
Interesting. Mr. Yadav, do you think this middleman will go away? Or do you think he will be reborn? Maybe the Arthia's son, the commission agent's son. If you can explain your model of procurement right now in maize, for example, you're talking of 6 lakh tons. Do you buy it directly from farmers? Do you have aggregators? What is the model, and how much will it change? Will you buy away from the mandis? APMCs. So just as a
So 5 lakh tons of corn is bought from the traders, because in none of the other states we are going directly and procuring it closer to the market. It is only in Bihar that we have gone closer, and we buy about 90,000 to 100,000 tons depending on the crop and the prices, etc. Plus we also source for our Bangladesh business from there whenever the prices are competitive. So yes, we work through aggregators because for a corporate, it is impossible to go direct because the land holding are small. We need somebody to consolidate, somebody to manage payments, because local relationships are very, very important in these things. And I think that is one knowledge which probably the aggregators bring. And I must tell you is that we don't pay any commissions or anything. It is aggregation fee, which because of a lot of services provided comes to between 2 to 3%, including some temporary storage, etc. And I must tell you that this is what is going to be the short-term model. And a lot of this money of that 1 lakh crore infrastructure funds will be spent in creating this near farm infrastructure and near farm entrepreneurs initially, who will go and become aggregation for bigger aggregators, for startups, for companies, for processors, etc. Look, everybody knows rural landscape. Big companies and the farmer is an uneven battle. Farmer will always win. The judiciary, the executive, and the legislature, all three will come in the favor of the farmer. It is just like a cyclist having a small accident with a Mercedes Benz, and you know who is to be blamed and who will be thrashed. So this is very, very simple. So we won't take that chance. We will work through these people who have relationships and who know a lot. Now, poultry is very dear to me, and let me tell you what freedom can do to poultry. One of the things is that, why people, government did not interfere in poultry. They interfered in dairy, interfered in everything else, but they did not interfere in poultry because they said that poultry kaun khata hai. I've been to agriculture ministers. Itna bada kaun khata hai? Itne kaun khata hai? It is now 1,30,000 crore industry. 70,000 crore of chicken is there. Year 2000, per capita consumption in this country, 1 kilo. Quietly in 2020, per capita consumption is 4.5 kilos. Which is the largest consumer of poultry in the country? Which state? Highest per capita? Tamil Nadu. The whole thing has been reformed. In 2000, feed conversion ratio, feed consumed by the chicken to produce 1 kg live weight was more than 2 kilos. Now it is 1.5 kilo. 25% efficiency improvement. Who has brought it? Integrator. New technology, new breeds, new nutrition, sophisticated plants, technology transfer in terms of management to the farmer. As Mr. Chandramohan said, our farmers have huge credibility with the bank. Growing charges were paid to the bank. These people have taken bank loans and put up sheds. I am telling you, come COVID, come drought, come floods, any government in 7-8 years, poultry consumption in this country will double. Because as the people are becoming rich, people are consuming more and more value-added foods, including animal protein. Today, animal agriculture is 1/3 of agri GDP. It is growing at 4-5% for last 10 years. Pure agriculture is growing between 0 to 1% because of controls. Time is coming when animal agriculture will be half the GDP. So I am saying that this is what freedom can do. This is what private sector can bring. And I have told you so many models are existing which can transform the rural landscape. And I must tell you that, as Dr. Gulati has said, you will be really surprised how useless are wheat and rice for this country. Even animals are not fed wheat and rice. We want corn. 22 million tons of corn is produced. 13-14 million tons are animals are eating. About 4-5 million tons is going for starch, and rest is going for some sugar industry. Only about 1 million ton is increased. और शोर ऐसे मचाते हैं कि सारा 22 million ton पंजाब में खा रहा है. You understand? So this is it is not good for wheat. You can't do anything. You can't make ethanol. And only when it is available at 1/4 the price, it goes in cattle feed. Can you imagine the uselessness of this crop? Similarly, for rice you can produce ethanol, but at a cost at which it is incompetent. So that is why I am saying that this is at one time the focus was right at what Dr. Gulati said. Now it is time to change. Look at oil palm plantation, how things are growing. Same thing. There is a very transparent model. The price is known to everybody. The formula is known to everybody. And it is growing. Now, in case they reform it, it can grow faster because we are importing edible oil. We have everything in surplus except edible oil. We are importing about 1 lakh crores worth of edible oil, almost 15 million tons of edible oil. The point is that there is a model which is existing, which can solve this problem. We just have to push it and strengthen it. It will require 1/100th of what we are spending in these 3 crops to rejuvenate your edible oil market, if I'm not wrong, if Dr. Gulati can add that number. But I am saying these are small support. 7-8 years ago, we were importing pulses. One spike in prices and we are pulse surplus country, and there is an import duty on import of pulses. So the point is that there is so much of energy in this country which needs to be unleashed. Back of the envelope calculation, if we come to global averages in food production in all our crops, fruit, vegetables, milk, etc., our production will double in this country. What will you do with it? We cannot double our population easily. So the issue is that we are staring at a time where unless and until we reform the access to market, we are going to be stuck with a very, very big problem in rural India, which is problem of plenty. Prices were crashed. There is a limit to which the government can absorb this. And what all can happen. That is why it is very important that people are weaned away from these three crops, particularly pushed into cash crops, pushed into animal agriculture. That is why this fisheries fund is very, very important, and we are very, very upbeat about fisheries and shrimp, etc. The exports are going to double in next 3-4 years with the incentives and the initiatives of the government. This is the way forward, and this is the starting point of the reform. This is, I'm saying, it is too little, too late, but not that we should try and stop it. Whatever things states have to do, executive orders of, and whatever corrections the government has to make, they should make it, because we are staring at a very big problem of plenty.
Mikhla, I'll just come to you for a moment. I just wanted to, from what Mr. Balram Yadav said, Mr. Chandramohan, are you scared of farmers? I mean, I think Mr. Balram Yadav said that, companies don't like to deal with farmers. What about in your case? You seem to be meeting farmers directly, right? I mean, were you ever scared of meeting farmers? I mean, do farmer? I mean, is it an unequal relation between you and the farmer? And a related question which I wanted to ask is, I think you were not able to answer it in the first one. Did it help that milk is not part of APMC? To that extent, did you benefit from that? The lack of, I don't think there are any, please.
See, milk is the biggest agricultural commodity of the country. Rice and wheat together, it doesn't make the volume of milk.
Yeah.
It also comes in trickles for 365 days. I am more allergic to the aggregator, not to the farmer. The aggregator plays a role in this particular business. Being a perishable commodity, he is very loyal to us. Once when the flesh is there, he will not move from us. He will bring extra milk. And in the lean, if somebody is giving 1 rupee, he will run away with all the farmers. So it is difficult to control him. So the best way is to just go to the farmer directly, and the farmer doesn't run away the way that he is doing it. See, the farmer has seen the benefit of animal health maintenance and increase in productivity, cost reduction, and payment through bank, where he is able to get the finance. Gulati was mentioning about the 70% to microfinance, 23-24%. Today, my man can get bank interest of 10% to 11%. So, we are very comfortable working with the farmers, and we are not at all comfortable working with the aggregator. But this is a business model. What he said is right. In some other business, that doesn't work that way. In our business, it works this way, and we are very comfortable. And we don't want an aggregator. We want a farmer direct.
Harish, I want to give a clarification.
You
misunderstood me.
Okay.
There is a difference. We work very closely with the farmers, work directly with the farmers in poultry, about 10,000 farmers. About 25,000 farmers very closely associated with us in oil palm plantation. Almost 25% of milk. Mr. Chandramohan is the gold standard in private dairy. We all try to do and copy whatever he is doing, and 25% of our milk is also following his model. We work closely with the farmer, but it requires patience, requires a lot of passion, requires involvement. But point is, when it comes to procuring general commodities, because
seasonal commodities.
Poultry farmer, we know their family by name. Oil palm farmer, we know them by name. We know how many, what acreage they have. The relationship is very close. 25% of milk farmers, very close relation. We can work with them directly. But when we procure corn, it may be this farmer this year, this farmer next year, this pocket this year, this farmer next year. So that is where the aggregation is needed, not everywhere. So you misunderstood me a little.
Okay. So that means for seasonal crops, we will continue to have aggregators, and for crops which are processed 365 days.
Kind of a contract farming or quasi-contract farming or direct procurement arrangements are there. There we will work closely with the farmers, and we do.
Mikhla, I want you to answer this question posed by Mr. Ranganathan. He's saying that isn't agriculture not essentially a state and local subject, which is best managed locally? Maybe the central government should remove any encroachments it may have historically made into this domain, rather than trying to dictate what the states should be. I think why don't you try and answer this question? Because since what we have had is the center coming out with these acts, right? I mean, first through ordinance and then and then through acts, yeah. And at the same time, we are saying that everything depends on the states, right? The success of whatever these acts depend on the individual states. Yeah, if you can handle this question, yeah.
So I think, it has already been abundantly clear in all the responses that the state is going to play a vital role. But I think also, particularly listening to Mr. Chandramohan, but also Mr. Yadav, it's very clear that, you can't easily separate production from markets. And that is the reason why the primary market and the first sale was always considered part of agriculture, which is a state subject. So, we have to understand the logic behind that. It wasn't because there was some idea of impeding interstate trade. Remember, we actually do have a national, there may be inefficiencies, but it is a national physical market. Produce moves all over the country. Certainly, there are taxes and there are all kinds of costs and charges, but we do have a physical market. It is extremely important to realize when it comes to the farmer, the first sale is very deeply tied up to production. In fact, in both of their comments, one of the very critical things that the separation between production, exchange, processing, and distribution is not easy to untangle. And when you are dealing with farmers, the relationship between production, and if you are a farmer, the relationship between production, we've talked about production credit, the way in which there's degrees of different kinds of interlocking, perishability, a whole range of factors that affect the way in which you access, engage, and the terms of your participation in markets, which is deeply linked to your conditions of production. With that in mind, this was always considered more part of agriculture. Right? It's very important. We have always talked about it as agricultural marketing. By referring to it as trade, are we saying that farmers today are traders? Of course, they participate in exchange, right? But they have been primary producers. This is not to belittle the fact that they take incredible amounts of risk. So I think there is no doubt that this step has come after 20 years of frustration with the amount of reform that has happened or not happened at the state level. That is understandable. But I think there was an integrity, and there must be an integrity, because the public actor that has to look at the comprehensiveness of agriculture will be the state government. And in the end, whether it's looking at infrastructure, whether, Mr. Chandramohan talked about the importance of public science, agricultural universities, all of this is linked at the state level in what is thought of as agriculture, right? And so I certainly believe there will need to be greater facilitation, synchronization. Interstate trade is important. We are going to need to have more mechanisms for integration. But at the farm level, when you're thinking about the farmer, the integrity of this process also needs to be understood. And it is an overwhelmingly physical process. It is an overwhelmingly process dependent, which is being done by small and marginal actors. Many of them are sharecroppers, tenant farmers. This is Mr. Yadav talked about the complexity. So I think there is no doubt that when you look at it as a complex, it is a state, it is really something where the state needs to play a very important role. State governments need to play the primary role. Even if the central government facilitates. And therefore, whatever has happened, I don't see it really leading to transformation unless this shift in balance occurs. Common markets are always negotiated. We have seen it with Brexit, we have seen it with other things. Common markets are negotiated. They require consensus. They require coordination. Professor Gulati himself has talked about the need to think at a previous point about GST-like arrangements where you have much greater interstate decision making, consensus building, coordination. These are very difficult to do in India. They're difficult to do in a democracy. They're difficult to do in a federal context, but they are not something we can bypass. So we are going to have to do it. And I think there is going to need to be much greater statesmanship at all levels, statespersonship, I will say, at all levels for this to happen. And it's something that is irreplaceable. I do want to make 3 quick points, Harish, if I may. The first point is about the MSP. I think our speakers have very rightly pointed out that the historical evolution of the MSP. But I do want to say that it has always been tied to our food security system. Our food security system has not done enough to ensure nutrition security. The needs of Indians and their changing nutritional needs is vital. Much more needs to be done. In this, oilseeds, protein, pulses, millets, all can play a very vital role. But I do want to say that so soon after and in the midst of the COVID pandemic, we shouldn't forget how much it did help people in India. This was a serious issue. At the moment that COVID hit, the fact, yes, it's all right. We've all pointed out we had much more than we needed. But a buffer stock has been a lifeline for a very large number of Indians. It has been vital in providing people, and should that buffer stock be more diverse? Should we be able to provide much greater nutrition security? 100%. But let us remember that we are still a country which has an ICDS scheme to provide 0 to 6-year-olds with nutritious foods. We are still a country which has midday meal programs. This is a country where over 90% of our people are vulnerable. From a nutrition security point of view, COVID showed it in a very specific manner. Over 70% are actually covered by a National Food Security Act, which tells you how poor they are. So I think we have to be careful. We do want transformation in this. I actually agree so much with Professor Gulati that we must move towards this. But we also have to understand the vital role that food security still plays. The interlinkage between the two needs to be understood and studied well. And we need to think about reform. I also feel that the situation that farmers in Punjab and Haryana find themselves in is a historic situation that has been built up both by center and state. In a context like this, blaming the situation and the absurdity of how convoluted it has become will not help farmers. If they're showing vulnerability and rage today, it is because they feel this is the only way in which the state supports them. So I feel very strongly, Mr. Yadav, Professor Gulati, if farmers were listening to this conversation and they agreed with you today, it would tell us that we are on the path to imagining Indian agriculture in the way that you're seeing it, because they can see themselves in the story that you're telling. For them to see themselves, for small and marginal farmers, for mid-sized farmers across this country, to see themselves in the story that you're telling, we need to do a lot more within all levels of the agricultural system, at the state level, within our cooperatives, within our public agricultural universities, extensions, and across all networks, to change the way in which we think about agriculture. For too long, we haven't given them anything other than treating it as a welfare sector. So I think today farmers are reacting like this because they are holding on to what you have promised, which is MSP and mandis, and not even delivered those with any credibility to a very large number of people. So if there is a reaction like this, I think we all owe it to farmers, and we can say it's all politics, but we do owe it to people to sit back and say, okay, how do we rebuild this in a way that actually involves and engages people? And here I would like to point out that, it's a small point, but it's important. Mr. Yadav, you're quite right that maybe at the judicial level, the judiciary may side with farmers, but on the ground, their bargaining power is very poor, right? Small and marginal farmers, to decide when to sell, firstly, you need to have production. You need to have had a crop which was not destroyed by various kinds of weather and other relations. And we know that many of our farmers deal with incredible production risks. You need to have storage to be able to hold on and decide when you will participate in a market. You need to have access to risk mitigation of a whole range, right? Which you require. And that is the kind of investments that we need. If we are thinking about what freedom means for farmers to decide when you sell, where you sell, and who you sell, the terms of their engagement have to change. People talk about access to markets. Whenever a farmer sells a crop for any cash, he has already or she has already been accessed by the market. The point is how to change the terms of their engagement in markets. And that is actually not a regulatory action. That requires a whole range of things, whether it is collectivization, whether it is improvement in production, whether it is access to reliable credit when you need it, whether it is risk mitigation mechanisms, whether it is good access to physical markets and real options where you can bargain. All of this is vital. And I do want to say that while I very much share the reasons for optimism in Indian agriculture, for too long we have treated Indian agriculture like a stalled structural transformation. We have talked only about distress-driven diversification rather than surplus-sustained diversification. Your own book, Harish, showed us how much agricultural surplus has been crucial to the building of regional industry in India. These are the stories we need to tell. I do think we need to go back to the drawing board, to some of the starting conditions that farmers deal with, and how you strengthen their hand in each of those. Mr. Chandramohan has beautifully illustrated what that means in the context of dairy farmers, but it's very difficult across different commodities and different crop mixes. I think getting that right is going to be complex. An interesting thing is perishable. Vegetable markets, for example, one reason that Azadpur and all these large mandis exist is not only because the credit they give to the farmers, right? And the massive commissions, which Professor Gulati is quite right to point out. But it is also because of the credit they give to the buyer. They play a critical role because your thelawalas and your small guys, they do vasuli on a daily basis with those very large number of people who actually distribute our fresh produce across small towns and cities. And they are very poor actors. They are not large participants in the market. They also take a lot of risk. And they are the ones that reach vegetables to gullies and across this country. They are also the ones who continue to function under very distressing contexts during COVID. So let us just try and also remember the overall context. And these are millions of lives engaged in these activities. I think one of our strengths will be to look at the diversity of private sector in India. Here we have in this panel itself a wonderful description of the different kinds of private sector. A large regional actor with a vision who becomes a large national dairy. Mr. Balram Yadav represents corporate strategies and different. We'll also have producer companies. We will have a whole range of different actors. And we have small millers, processors, and others who are also part of this system. And the multiplier effects comes from all their participation. So I'll stop here, but it's just to put us back into the context that unless this whole system and its realities, in which there will be people who will disappear, who will reappear, who will dynamize, who will change, but they are the ones who need to build the future of India in production. And I really think for too long, our vision has either been a vision where we thought the private sector will save, or, we'll have to treat farmers like welfare. But treating farmers like entrepreneurs and treating them in this way means taking them very seriously, taking their risks and challenges very seriously, and investing in them. I'll stop there.
Dr. Gulati, I want you to take this two questions from Mr. K. Bharatam. One thing which he's talking about is how does the issue of farm credit get resolved? See, main thing is, I think, the Artiyas, I think this is the point which Mr. Balram Yadav also said, the financing, the most of the mandi exists because of this financing. See, how does the issue of farm credit get resolved? Can there be more and more of organized credit, once you have some kind of a disintermediation and direct engagement? This is one thing. And the second question which he's asking is government has shown repeatedly a tendency to favor urban consumer by imposing export bans. The recent example is of onion exports. So how much, you think these reforms, there is much conviction. Maybe, in the next 6 months, we don't know. Everything may get, do you see a possibility of a reversal? Suppose food prices were to go up now in the next, 6 months. So I think these two questions of Mr. Bharatam, if you can just answer.
I've already written on this onion export bans that one foot of the government is on the brake and the other is on the accelerator, and perhaps the left hand doesn't know what the right hand is trying to do. So there are short-term political concerns. Bihar election is coming, prices of onion should not go up, and can we control that? These are hiccups in the system. But the direction that has been given with these legal changes, I feel, is going to unleash thousands of experiments, pilots, and Out of that, as Balramji said, that 75% may fail, but there would be Chandramogans of fruits and vegetables that will appear on the horizon, and it's a long haul game. Now, I do want to comment on this. It's a state subject, and why the center is intruding into this. All the action of economic activity is in the states. So center has to change only the laws. De-licensing, is it that Delhi was to do manufacturing revolution or Delhi was to do import-export? It is always the people in all over the country. And therefore, changing the laws, encourages some states, some people much more than others, and they do better. Those who are better equipped. So that is how it is going to pan out. To me, it's sorry to quote. In fact, at this time, Chinese Deng, who did the reforms, that it's not the color of the cat, whether black and white, that matters, so long as it catches the mice. So long as it unleashes entrepreneurial spirits and people try it out and make it the system much more competitive, I'm very hopeful that Indian agriculture will emerge. And even the wheat and rice, the Punjabi farmer, their future is not in wheat and rice. I can tell you, if they want to double their income, they have to diversify to high value agriculture. Just harping on higher and higher and higher MSP, making all non-competitive. Wheat has already become non-competitive. So you keep on accumulating. How much you can accumulate? So sooner or later, wisdom will dawn. This is what had happened in European countries, with higher and higher prices, and people have to shift. I think the subsidy that, if I have to give, not through prices, but through investment subsidy, which will bring in innovations, which will bring in cost reduction, which will boost their productivity. This is where the farmers need to be helped, and in a manner which leads to sustainability of agriculture. That is very critical. The other question that you had put was about the credit. Over a period of time, I have done a report with the RBI on this. It's on the website of RBI on agriculture credit. That how over a period of time, the share of organized sector, the banking sector, which used to be less than 10%, today has gone to a substantially higher, roughly 2/3 of the credit that is funneling in to that. But when the farmer needs quickly, his wife is sick and he needs 10,000 rupees, the banks don't give. This is where the innovation of Kisan Credit Card was. I think those rules have to be made somewhat much more liberal, that so long as they are paying, so you take a risk. And during the Vajpayee time in 1998, they started off. I think we need to really work on that. Our target is that 100% of the credit, to the extent possible, should be through the organized system at 7% or 4% or 9%, less than 2 double digit. If we can do that, but it's not going to happen tomorrow. Some announcement will come in the few weeks. Action is already going on in RBI as well as in NABARD at present. And in the next 2-3 weeks, hopefully some announcements will be made on agri-credit.
I think what we'll do now is have closing remarks by Mr. Balram Yadav and Mr. Chandramogan. And because I think we are already running out of time, because a very substantial thing. Yeah, Mr. Yadav, yeah, please.
3-4 points. I think one, I would probably respond to Dr. Krishnamurthy. I fully agree that rural poverty, this is my 31st year in this industry. We have 62 factories in 20 states. I have seen it up close and personal. And I always say that it is a very, very risky sector. And can you imagine people who are paid twice a year rather than 12 times a year? And that is also a risk. Having said that, 70 years of welfare state has not delivered to these farmers. All the benefits have been cornered by the big farmers. The big farmers have become bigger, stronger. And let me tell you, I can take a full day session on the caste bias, the region bias, etc., in government policies, and that I don't want to go there. So this is something which I wanted to say. Rest, I think I feel that this is a step in the right direction. And I have been in this sector for 31 years, and I have set up so many factories, so many establishments. And let me make a very strong statement. And one of the reasons why agriculture is like this is because of it being a state subject. Because look at an entrepreneur like us who operates pan-India. It looks like as if we are dealing with 25, 26 countries. For same permission in different states is so difficult. Somewhere you will get in 1 week, somewhere the forms will be different, requirements are different. You are dealing with different people. Why we don't procure from other states? Because who wants to take a APMC license and go for returns, etc., etc. And a trader will take a license, not give returns for 10 years. Nobody will bother him. A corporate will take a license and not give returns for 2 months. There will be 3 notices. So I am saying one of the big strengths and weaknesses of this sector is the state. And let me just tell you that if you think that state is only interested in the welfare of the farmer, you are totally wrong. I think political considerations are first 3 in the state government's list. So farmer and other people come later. So I just wanted to make that statement. This is a strong step. Let us support it. And I am very sure that time has come. And I just want to see a lot of traction on this. And I must tell you one more thing. I have studied this sector a lot from the industry point of view. I respect all of you for your experiences, academics and policy. Policy is an evolving process. Definitely changes will come, changes will keep on coming. But having said that, I strongly feel that it is time we unshackled this sector. It is time we looked at models which are working, particularly in animal agriculture. It keeps on chugging along. It keeps on going along. It brought unparalleled prosperity. Dr. Chandramohan has already pointed out, and there are so many examples. Let us free this pure agriculture also and move on. I am very sure India is going to be an export hub for food in next 5 to 10 years in case we continue on this path.
Mr. Chandramohan, would you like to make some remarks, especially the fact that we are surplus in so many commodities today? What is the future? How do you look at it, including in milk? I mean, we never thought that we'll be, surplus. So much of I think your own industry, we have seen how milk prices have crashed, and so what would your concluding remarks be?
See, our system over the years have been built to handle shortages with control and other things efficiently. Whenever there is a shortage, they bring imports and everything and they will manage. But whenever surplus happens, they ignore it. Ignored surplus hounds them back as shortage subsequent year. So you ban onion exports. You also banned dairy exports. So what's the point? See, I got a APEDA award in 2016 as the largest exporter of dairy products. Next year, dairy export is banned. And what do I answer my customer? They are abroad. And I have exported to 38 countries. The customer feels I am unreliable. I am not unreliable. But probably the situation is, it is beyond my control. And the policymaker says, there is no export from India and you have to stop it. After 1 year, they say, you have surplus, you export. And my buyer says, probably last year, where were you? So these are all the conditions. There should be a stable policy. If you are going to have surplus or shortage, if there is a surplus, leave the farmer to enjoy the benefit for that year. Sorry, if there is a shortage, allow the farmer to enjoy the money. See, this is like a chemical industry. An agricultural farmer doesn't make money all 4 years. He loses 2 years. Maybe 1 year he makes a bumper crop. Let him enjoy the benefits. Why curb it in the lean? Again, there can be a data bank where we can guide the farmer. See, farmer also goes with the herd mentality. Last year, they got a better price for onion. Everybody plants onion and they produce surplus and the price drops. And they can be educated with the data system of the government. Look, so many people have already planted, don't go for onion. At least let him not go for onion, let him go for some other crop. See, pulses today, we have surplus. We have definitely done it well. Milk, we have surplus. Fruits and vegetables, we have surplus. We have done a lot of things. And our bureaucracy must understand to handle surplus now and not with the shortage mentality. And the export ban is definitely not in the right direction. Once when you are liberalizing all these things, there should be a consistency, there should be a customer follow-up, And the customer abroad must believe us that we are a reliable ally to be on the supply chain. These supply chain interruptions are definitely disturbing the overall growth of the industry. And this is something as a policy makers we have to emphasize. Thank you very much.
I also think that building markets is something going to be the real challenge for our farmers. I think Mikla, you will also agree with me. I think that's going to be the real challenge. How do we build markets? Including I think what Mr. Yadav said. Export market. We have been completely outpriced. Our maize has been outpriced in Bangladesh and all these countries. How do we do it? So maybe these reforms. We must give it a chance. We have tried with the others. Maybe this can work. Let us see. But we have to start off with the assumption that we are in a surplus today, and finding markets is going to be very difficult. We are probably in a situation what the US was in the 1930s. You had a depression. When really with the whole thing of how do you find markets? I think that is going to be the real big challenge. So I think now I'll hand it over to Vanitha. I think maybe for a vote of thanks kind of a thing. And thanks a lot again, Mr. Venu and Vanitha. Please, Vanitha, yours.
Thank you, Harish. What can I say? I mean, it was such an outstanding panel discussion. A big thanks to you for putting this together for Chennai International Center. We've already started receiving feedback from our audience saying it's an outstanding panel. And I think it's a great opportunity for people to understand the issues in depth. For bringing out all the issues. I think you brought out, all the issues that are out there waiting for questions to be answered. That was like a huge takeaway for our audience. And that's one of the objectives of CIC as well. So a big thanks to you, Harish. And to all the distinguished panelists who are here with us today. I know how busy you are all. Dr. Gulati, Mr. Yadav, Dr. Mekla Krishnamurthy, Mr. Chandramohan. Big thanks from all of us from Chennai International Center, the board, trustees, and the members of Chennai International Center. And to all our audience, I think without you all, CIC will not be able to function the way it does today. Thanks for, keeping the ideas coming, speaker suggestions, topic suggestions. I think, we are on the right track. A big thanks to all of you. And our next program will be on October 16th. And that's going to be completely different from this. It will be on entertainment. We're going to look at, the cinema landscape. So that's the next discussion. Truly diverse Chennai International Center. So thanks everyone and have a good evening. Thank you.
Thank you for this entertainment.
Thank you, everybody. It's a pleasure.
Thank you. Thanks a lot. Thank you. Thank you,
everyone. Thank you, Mr. Thank you.
Thank you, Harish.
Thank you. Thanks.
Thank you, Yadav and Chandramohan and Dr. Mekla. Thank you very much.